Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, August 24th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll see right here, the ES over the last few rotations here has seen 4-day pullbacks that have been about the same size each. Each one has also responded very quickly to get back to the previous highs and beyond it. And we've seen that yet again here over the last several days here. Midpoint retest 2 days later on a new high. Today, pre-market here also seen a new high. And back down we go a little bit from that high. At around the London Open here, we saw a sharp turnaround from the highs, now trading just above the previous week's high price of 44.76.5. That's an important level here early on today. But there's the potential to see a snapback again. If there's a hard enough rejection here, we could see a big snapback all the way. But for now, on a short-term day trade type of basis here, what we were looking for yesterday at the end of the day was a fade after trend day, whereby a rejection of the previous session's high and close opens up a return back to the previous session's midpoint. That could take us back down to yesterday's mid of 44.59.63. That could be in play. So 44.60 basically could be the target down below. That's another 18 handles from where we currently are. Any pullback into the previous session's close, kind of a higher low, or any bounce off of VWAP up above in the low 80s could provide a return back down. Now overall, based on the fact that this thing is trending higher, any morning weakness here should be defended by bulls looking to defend these counter trend rotations for a new high. So by the end of the day, we could be higher off these lows. Again, look for a 44.60 bounce for a shot at the buy the dip opportunity early this morning, and a continuation higher the rest of the day. Alright, let's take a look here at the NQ. The NQ also seeing a big continuation to the upside. Today reaching new highs of 15.384s. You can certainly see we've gotten a big breakout from this major multi-week range right here. Yesterday's breakout was a tremendous move here. Now what we're looking for is how do we continue from here. At the moment, again, very similar to the ES, we've seen a rejection from the London Open to current levels. Price currently trading off the 15,300 level, but could see a pullback as deep as the previous session's midpoint. So if we are to see further weakness, lower highs, say into the previous high or close, could provide an opening back toward 15,212. 15,212 is this dot right there. That's the midpoint from yesterday's range. And any pullback into that zone could provide an opportunity to bounce it back up toward 400 and perhaps even beyond. So right now, quite a bit of selling pressure here in pre-market trading. A failure to hold 15.3 could open up a continuation back toward 15.2, the previous session's mid. That could provide a checkmark trend day up for those who want to buy the dip. Alright, let's take a look now at crude oil. Crude oil had a significant rally in the previous session, finishing the day over 5% for the session. You can see a big outside day buy signal right there that developed. A couple of key levels to note here. Number one, this is a one-day move that was tremendous, and typically speaking, if the one-day move occurs to the upside, a big one-day move of 4+ points similar to this day, you tend to see a continuation in the days that follow. So anytime you see a big up day like that, you tend to see more strength ahead. Now one thing to keep an eye on is the key range low here. That right there is 65.02. We've now gotten back above that level. Any pullback into that zone, 65s, could provide an opportunity for a defense and a continuation up toward the center of the key range, which is 70.27. So that could be a path forward here for crude oil on a short-term basis. One key thing obviously is we're still inside a bearish Pima trigger zone, so we could certainly see weakness and another drop like this, But right now that 65 level is going to be very important to continue to watch. The next level to keep an eye on will be 66s. That level right there, that is the previous quarter's midpoint. And taking it offered right here, it opened the door to the previous quarter's low. However, this was such a significant day yesterday, it took it right to the breakdown point in one session, and now we're above it. So that's going to be a big litmus test as well. Can price stay above that zone as well, which could open up a bit more upside towards 70. Alright, let's take a look at gold futures. Right now, gold seeing quite a bit of strength out of the narrow 5-day range. So this 5-day range right here, right there. Draw it right there. There it is. You can see 1, 2, 3, 4, 5 days, and in the previous session here, a stop run day up, a failed new low, a bullish outside day to the upside, and now we're working our way up toward the 1835 to 1840 zone. We talked about the market structure with this one as well. Market structure at 1760, which is about this line right here. That's 65s. It's this line right there. Very important. The next highest level here is about 1835 to 1840, and that's your zone. That's where we've traded here. It gave it up on the flash crash, came back to reclaim it, and that's why I mentioned before, now that we're back above 1760, any pullback as deep as that could be bought for a continuation toward 1840 ahead. Alright, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.